Hello, I'm Mike Graham, president of Midwestern Securities and the host of the Banking on Growth podcast. Welcome. With us today, we have our friend Margaret Hartigan, who is the CEO and founder of Marstone. Welcome, Margaret. Thanks for being with us.
Thanks for having me, Mike.
Yeah, no, I'm glad it worked out. We were just reconnecting last week. We've met at a couple of conferences over the last couple of years, and then we recently reconnected at the Midwestern Securities Association conference in Fort Lauderdale, Hollywood, Florida. So it was great timing to see you again and learn more about your business and your growth. For our audience, will you give our audience a little bit of your personal background and your business background as well?
Absolutely. Well, thank you again for having me. I'm Margaret Hartigan. I'm the CEO and co-founder of Marstone. And Marstone is a digital investment and goal-based planning platform that also has a financial wellness and literacy component. And this platform was always designed for institutions, and it was inspired by my time as a financial advisor. I was a financial advisor for about 10 years, began in San Francisco, was client-facing from 2001 through 2007. And then just in time for the financial crisis, I had moved back to New York City. And it was there that I really was inspired to create a platform that I felt would address the three challenges I saw in the marketplace. So the first one was a lack of comfort and familiarity with financial terms and investment terms by lay people. So I thought, could we adopt a lot of the trends that we were seeing in technology, in particular design trends, and could we create a platform that would meet clients and members where they were and help them see themselves in their money? The idea was that hopefully we could help demystify and humanize finance for people. The second challenge was, as a financial advisor, I knew that, believe it or not, a lot of financial advisors plateau at a certain point just because of limited hours and sort of antiquated technologies that make it difficult for them to scale and engage with their clients. So I thought, could the same platform that met the needs of the retail client, could it also help a financial advisor or banker? And then lastly, as we all know, the younger generations are very large. They tend to be tech first. And the way they consume information, the way they research, compare, and consume is a lot different. And I thought this was a really great opportunity to have technology augment, not disintermediate a financial institution. So that is our origin story. Again, we're a digital investment and goal-based planning platform that any institution can white label for their own purposes.
Margaret, there's a lot there in those three things. Will you break them down to real basics? How do you work? How does Marstone work with community banks and credit unions to accomplish those three things?
Well, thank you for the question. So there is a lot there. The platform does quite a bit, and it can be configurable. It is a platform that can work for institutions that have their own wealth management or RIA or broker-dealer, but it also works for institutions that don't currently have those things. And so for the client, what it is it's a client-facing client portal that enables them to get information. They can do risk tolerance questionnaires. They can register. They can open an account. They can have a portfolio generated for them. And then it can pass through to your back office or the back office of like your custodian or what have you. And it will do all of the AML, know your client, and actual account opening. So everything's digital from that standpoint. For the institution, we have connectivity to different online banking platforms. So it enables us to have a single sign-on, ease of use. So it's a really unified experience from the member or client perspective. Our information can also show up in the dashboard of online banking and in-app experiences. And then lastly, we also partner with different asset management companies. But I think what's important, what has been really attractive for institutions like yours, is we have domain expertise both as practitioners and we understand the regulatory environments of the financial institution. But we also know that institutions are, risk averse, but, appropriately. They have limited resources from a tech standpoint. And then they have a lot of core or very important technology partners that this platform has to be able to speak to, and it has to be compliant. So that's what I mean when I say we try to have a configurable platform that is really meeting the needs of the end client, but also ticks and ties with the back office and what I would say are the fundamental technology systems that make the bank or credit union run.
So question, Margaret.
Sure.
It's an understatement, a major understatement to say what you guys provide is a digital small account solution.
I think that's true. My background was I was a financial advisor. I never believed that technology was going to replace the importance of a bank teller, a credit union, or a financial advisor. But I do believe in this world that it's impossible for us to do human-driven activities the way we have in previous decades. I've also been always the term robo-advisor. I really believe that this is just part of the typical digital transformation journey that every bank and credit union has undertaken very well, by the way. And what we're seeing is that everyone is using their phone first, right? It's just natural. We all consume data this way. And even ultra high net worth people want to be able to see their portfolios, their banking assets, their liabilities in an easy, minimal click, easy dashboard way to understand things. So you're right. Our platform, because I came from Merrill Lynch and other people in our organization came from Morgan Stanley and other places, we really thought, let's build this the way any big wirehouse or wealth management or bank or credit union thinks about segmentation of clients, thinks about permissions, and also thinks about suitability and fiduciary guidelines. So what I mean by that is our platform, the goal is to have a unified experience, whether you're a digital native or a mass affluent person that self-directs, or whether you work with a trust officer or a financial advisor, like a hybrid model, or you are an ultra high net worth person, but you want this kind of groovy look and feel that is easy to use off the bank's website or app. So to that line, we can be individual equities, we can be ETFs and low cost portfolios, but we really do have the ability to also do SMA, UMA, alternatives, et cetera, even, down the road, crypto and things of that nature. So as long as we can open an account digitally, as long as we can track the data, as long as we have connectivity to the wallet, the custodian, or the core, we really can be a multi-purpose digital solution.
So from a customer experience, would they go to name your community bank or credit union's website, and there would be a link to a private labeled portal that they would open an account. The customer would open a brokerage account, but it would look like like a TPM type of you're opening this. It's not the traditional side of the bank. The disclosures would be there, that sort of thing, but it would still be co-branded like the bank or the credit union. It would still look and feel like it's part of the financial institution. They could open an account, do their trades, fund their Roth IRAs, stuff like that. Am I correct so far?
Oh, absolutely. Well, but, in that question are buried additional nuances. For instance, if you currently have wealth, we can be embedded as part of that single sign-on wealth experience, and we can just be the digital solution. And again, exactly like you said, via single sign-on. In that case, you can decide to just use all your own branding and maybe just have Powered by Marstone, or maybe not use the Marstone branding, because maybe you're using your models. Maybe you want to do the trading rebalancing and you only look at us as technology. In other models where someone doesn't have the regulated entity and they sort of are partnering with us, again, it can be via single sign-on and you would have that co-branded relationship. It still stays in sort of the look and feel of the bank or credit union. And you're right, they're able to be co-branded, and we can do all of obviously the digital account opening and all of the technology support, but we can also do all the customer service, and you can utilize our regulated entity, and then we can revenue share back to the institution. And that's something that people are really excited about, is the ability in that case, in as little as 4 to 6 weeks, be able to offer a digital wealth solution, have the co-branding, and then have this new means of client engagement, non-interest income stream. And so, yeah, it's very flexible in the way that it can work.
You mentioned it could tie into the bank's core processor, and it could see. Am I accurate to take from that? It could see checking accounts, savings accounts, balances, and kind of data aggregate, show somebody the wallet entirely.
For sure. So what's great is typically via single sign-on and identification and things of that nature. It's usually the online banking partner where you get a lot of that information, or whatever the app solution is. So let's say you use Jack Henry or Q2 or Nimbus or others. What's nice is that there's been a lot of advancement in technology over the last 5 to 7 years. And so you don't necessarily always have to do the deep core integration. There are other potentially easier, lighter lifts and technology integrations that enable the client to see both their banking assets and liabilities and whatever they might have at the bank or credit union, as well as the wealth management. And, big kudos, like I said, to those core providers and online banking providers that are making that really easy for banks like yourself to easily adopt a solution like Marstone. And we are partnered with the 3 that I mentioned, and others.
So Margaret, customer experience. Customer comes in, they log in, single sign-on.
Mhm.
They can see the bank, they can see their small account solution. So we're a broker-dealer, we're an RIA, we're a BGA for life, long-term care, disability insurance products as well. The Marstone product, that could also see the wallet share that we would be managing. Is that accurate?
In your instance, it could be. That is possible. Yes, we could have data sharing of that nature. The other thing that's nice about our goal-based planning and our financial wellness components is that we're actually also able to provide the services and opportunities and content that you would want your clients to see during different parts of their journey. And then we have links that link them right back to where you might want them to be. So we can share that data, and then we can also cross-sell opportunities that may sit outside of our domain. But again, because we are under the same umbrella, we really create like an ecosystem so that it's really easy for a client to go back and forth.
Is Marstone a broker-dealer or an RIA?
We're an RIA, yes.
Okay.
And we have broker-dealer partnership, but we're not a broker-dealer ourselves.
Okay. The data piece, the aggregation, performance reporting, stuff like that, how does that compare to something like a Black Diamond or a Morningstar?
We work with outside partners to do performance and some of that data reporting. I wouldn't say we're an apples to apples competitor to either of those. We're actually more partners and complements to them. I would see us as more a fulsome digital experience where we're doing everything from suitability requirements, online account opening, like that whole onboarding process, the trading, rebalancing and whatnot. We're not in the market to compete with Black Diamond or Morningstar from like a pure client portal perspective.
So in a community bank or a credit union, what sort of revenue share could they expect, or do they expect from this portion of the line of business that you have?
Sure, it would be up to 25% back to the community bank or credit union. And then there's other opportunities through our wellness and marketing capabilities to drive other lead gen opportunities, whether it's for high yield CDs, money markets, back to mortgage, car loans, whatever your suite of services might be. Right now, we're doing more just on portfolio management and AUM based pricing, and that we revenue share back to the institution, the sponsor institution on that regard. If they're using our regulated entity. Otherwise, you may engage with us just as a technology because you want us to plumb into your RIA and broker dealer. So again, we can be flexible. On some of the lead gen opportunities, that is that I'm not going to say it's a case by case business basis, but not everyone would use us for that capability of lead gen for those deposits and other business lines.
Margaret, to this point, we focused on the wealth management side of the business. Will you talk a little bit more about the education piece of Marstone also?
Sure. It's really what we're probably most passionate about. We believe that education is critical. We don't necessarily think everyone is ready to invest right now, but a lot of people are interested in learning more, getting their house in order, and want to be well positioned so when they do have those opportunities, they can make educated decisions. So when we thought about, why do people invest and save? We thought it's really Maslow's hierarchy of needs. It's food, shelter, security, and then bits of aspiration and whimsy. As human beings, we might like to think that we're all really different, but at the end of the day, we really care about a lot of the same things. It's our health, our loved ones, our pets, and, like some hobbies. How we complicate our lives with expensive car payments or houses or trips, that's our own doing. But at the end of the day, when you look at what we spend money on, it's largely the same. So what we realized was there an opportunity to create gamified or interactive goal-based planning platforms that sort of was like Pinterest meets shopping cart, where someone would pick a goal. Let's say I want to buy a car so I can go to school or work, or I need, in shelter, I want to buy a house or rent an apartment or whatnot. We could help people identify what they wanted to do. We plotted along a timeline, and then we help them understand and calculate what's going to be required for them to reach these goals. And what we find is that people quickly understand what they can and can't do based on the time and the size of the goals. And they either want to aggregate outside assets so they can apply those monies towards those goals to reduce their, monthly nut that they have to hit. It helps them understand, compounding interest and market assumptions kind of quickly. But what we also love about it is that people actually start self-correcting quite quickly when they see, well, actually, maybe that's a bit too much house, or maybe I should push out buying that house by a year or two, or retirement. They start getting up the hockey stick of learning very quickly, and they start feeling empowered, and they want to go to the next level. So we love this tool. We think it is an integrated tool. We feel it's a total bank or credit union solution, because a lot of the things that people plan and save for go beyond wealth management. It could be lending, it could be, emergency savings, it can be insurance, as you highlighted. And so this is a really wonderful tool for someone to see themselves in their money in an integrated way. They don't have to have a lot of prior knowledge of math or investments. It also live updates according to your investments and your other accounts. And the data insights that you get about your clients and members are really extraordinary. Not only do you know what they want to do, when they want to do it, and also what they're prioritizing over other things. So we are starting to get insights to what people's values are. And this extended real estate on your phone or on the website that the Marstone platform offers now enables you to start doing very targeted, personalized messages and introductions to opportunities. So cross sells or upsells, but I would say also introduction to opportunities that are both suitable and context relevant for the client or the member.
It sounds like the buzz phrase of the last 18 months, AI.
Mm-hmm.
We're learning from our customers and using that as cross-sell and upsell opportunities. Is that accurate?
Absolutely. I mean, AI, just as I said earlier about technology, AI is not really going to replace everyone's job. It's going to replace people's jobs who aren't using AI. And it's going to create a lot more jobs for people that have an understanding. AI has the ability to create opportunities and identify opportunities that are already with clients within your four walls. And think about how much easier it is to conduct more business with clients you already have versus trying to go out and get even more clients. So I think that AI has a huge opportunity to see insights and patterning of behavior. I like the term psychographic. It's not really about your gender or your geography or your age. It's who are you as a person? What are your values? And how do you like to spend your money and your time? Can we find patterns within our own data They help us identify these kind of tribal identities or psychographics. And then can we match the suitability of different services, products, coaching, advising, etc.
So Marstone is small, privately held, like Midwestern Securities were small and privately held. One of the things at the BISA conference last week that was clear to me is that Midwestern doesn't have a peer group. Every broker-dealer in that room is publicly traded or owned by private equity. Who is Marstone's peer group, and what makes Marstone unique?
Marstone's peer group is any financial services company that is trying to crack the nut on this intersection of banking, wealth, lending, right? Our peer group, they can be our competitors or they can be our allies, right? Our co-opetition, if you will. When we first started, we'll be 12 years old in September. When we first started, we were the first ones to ever go enterprise. We were never direct to consumer. We've never been direct to consumer, but our technology's always been enterprise. Our first big partner was with BNY Mellon Pershing. Our first big client was HSBC. Actually, our first client was HSBC. And, people hear that as a credit union or a community bank, and they say, oh, but that's for big people. That's not us. But what the beauty of that, the other side of that is, wow, this technology that was pressure tested and vetted by, a top 5 global bank is now being brought to mid, small, and local institutions in a really cost-effective manner. So we've been both pioneers and settlers. What I mean by that is whenever you have innovation, you have the person with the big, bold idea, but usually they run out of time and money before the market's ready. It's definitely taken us a lot longer to have community banks and credit unions and insurance companies ready to adopt digital wealth. But as demonstrated by what we heard and saw, at BISA and other conferences, it's really top of mind for a lot of institutions, both the large private equity backed ones, as well as the publicly traded. And we feel that we are in pole position. We are practitioners. We have exceptional design, exceptional technology, and then we have really fabulous partnerships both in the online banking community, the cores, the asset managers, and the custodians. I think those things set us apart. We're really keenly aware of the regulatory environment. We're very keenly aware of the sales motion that you all have within a bank or credit union. We understand the importance of back office compliance, client associates. But what we're really excited to do right now is really help banking and other silos within an organization understand the importance of wealth. Also help redefine wealth management. A lot of people are put off by the name wealth. They think, gosh, I don't have that kind of money. I'm not Warren Buffett. I'm not one of these people. Wealth means high yield CDs. It means creating opportunities for the future, whether that uses insurance, whether that's better money markets, whether that's diversified portfolios. We are just part of the digital transformation and the digital ecosystem. And as you know, competitors, online competitors, whether they're, robos or trading apps or whatnot, they're all marching towards banking. The minute you go onto one of those platforms, they're immediately cross-selling you with a high yield CD, a credit card, or a money market. I think our understanding of banking as well as the regulatory environment, as well as investments does set us apart. And I also think what sets us apart is that we truly believe that community banks and credit unions are in pole position if they can come up with a strategy that is focused on the user and the user's experience from the app and finds very elegant ways to remove friction between wealth management, lending, and banking. And we think the progress and collaboration we see with online banking platforms and cores and custodians really enables a credit union or community bank's app to compete with any kind of groovy young person's app that we're seeing right now. We know that people 25 to 44, 70% of them would like to consolidate all of their banking and investment activities. We also know the majority of those folks will actually choose their bank and consolidate their banking where they're doing their trading. When people don't have wealth management, they're losing out on the next generation of best clients. And it's very hard to repatriate those clients back to the bank or the credit union when they've already started a relationship with another digital app.
Yeah. So a couple of things you said are really important there that we completely agree with. And I think a lot of people would be challenged and their eyes would be open to just hearing what you just said, if they let it sink in. 25 to 44-year-olds, 70% want a place to consolidate. They want a simplified, robust financial experience.
Mm-hmm.
Wealth management, the banks and the credit unions that are doing wealth management really well are in pole position to, I think pole position was your phrase, to win in this. And I think that a lot of banks and credit unions and broker dealers in the past have looked at robo advising as a small account solution that they need to do because everybody tells them they need to do, but nobody makes money at it.
Mm-hmm.
And it's a transactional tech to satisfy those customers who just want to do business on their phone first. And lots of small accounts hasn't been a great profit center for a lot of the financial institutions that have done it alone. My hypothesis back to you is, but where it becomes exceptional is when you tie it. One of the first things you said on this podcast was it doesn't replace people, right? When you tie it with wealth management, and when you tie it with the relationship with the financial advisors, with the loan officers, and you have this digital tool that helps navigate and identify relationships, that's where it becomes exceptional. Is that a moving statement?
No, I think that's right. And when I would say, even more broadly, community banks and credit unions, whether or not they have wealth management or they don't, whether they use a TPM or third-party marketing partner like a Raymond James, LPL, or Cetera, or they don't.
Or preferably Midwestern Securities.
Right on, or Midwestern Securities with Marstone.
That's right. Who's, by the way, neither of which are publicly traded or private equity.
That's right. But what I would say my intention with that statement is community banks and credit unions are the backbone of the financial structure of this country. And your clients, the credit union's members, they vote with their values. They vote with their dollar. The challenge that we all have to wake up to is we do not offer the services and the experience that are table stakes for the cohort of people that we mentioned, 25 to 44 or earlier. What do we do? Every institution has 20% of their clients or members are driving 80% of their revenue. How are we cultivating the farm team? How are we bringing those people forward? And are we looking at our leakage reports? Are we looking at the ACH flows? Because I think when you do look at them, most people will kind of have to pick up their jaw from the table because it's going to wealth management and insurance companies. And why? Because a lot of these institutions, community banks and credit unions, their client aid, their needs become more complex and they leave because you don't have it on the upper end. And they don't begin with you because you haven't offered it. So I think about community banks and credit unions. I think about brands of there are periods of your life where a brand is introduced to you and has a really great chance of being sticky. One is when you get a car and you have to get insurance. Whoever that insurance provider is, you don't care as a kid about insurance until you just want that license. Then when you look for renter's insurance or a car policy or homeowner's policy, that first insurance company actually is in pretty good stead. A community bank or credit union is usually a place where someone gets their first account. They might do their first auto loan. And we are missing a huge opportunity of not offering accessible, low points of entry, suitable investment opportunities, which are a gateway to wealth if done well, to our clients and our members. And that is the thing that people really have to absorb soberly. This idea about whether or not robo worked, it's a moot point. Betterment, Acorn, Stash, Robinhood demonstrate it works. What those folks did is they made it accessible. They limited the number of clicks. They made onboarding really easy. They educated while they went. And it's a simplified user experience. I say that community banks and credit unions are in pole position because you've already won the minds and hearts of the folks. If you can find a solution that is embedded in your app and your online experience, you're off to the races. That's what I mean, because I believe that people want to stay with the person who gave them PPP, with the person who stuck by them in their communities, and that are aligned with the missions and values of your clients and members.
Yeah, good comments. We agree. We think community banks, credit unions are in town, in person, involved, and that's an advantage that they have over the big banks, the regional banks, national banks. Just can't compete with because of the in town, in person, involved, being close to the customer, close to the street. This has been a really good discussion, and as we were talking a few minutes ago, I was like, should we stretch this out and make this one long one, or break this into two? Because there's so much ground to cover. Are you familiar with customer journey mapping?
Yes.
Okay. How do you see your product fitting in with community financial institutions in their journey mapping experience? For our audience, journey mapping, I view it as basically just trying to be an inch wide and a mile deep, and really dwelling with our top clients, their financial experience, and trying to map out a customer experience where we're solving all of their financial needs at a very high degree level of professionalism, and we're fully monetizing that relationship, and we're keeping that relationship from walking out of the bank, because if they don't have a TPM like us, if they don't have the technology like you, and if they don't have those services, they're going to find them somewhere, like you said. And once they leave, just like you're talking about brands and processes, when somebody leaves the car lot, they may never come back to the car lot. They're going to find a different place, a different way to buy. To take that thought further, we want them to be excited about being consumers, but we want the next generation of community bank stockholders to be excited about being stockholders in those community banks. So the bank can stay independent. So the bank can stay a stalwart in the community and not have to sell because people are bored with the low dividend and low growth. And this worked well from 1930 till 2020, but I can just buy a mutual fund now since I'm not living in my hometown anyways. Mm-hmm. So these are connected, right? We need to give them an exciting place to do business. That translates to more revenue. Stockholders are happier. Exciting place to want to hold mom and dad's stock when they pass away, or want to invest in their community financial institution so their kids and grandkids can have these sort of, relationships that are brand loyal. And there's something that they want to wear the hoodie, they want to wear the baseball cap.
Right. Well, you hit on something that's super important, which is why I think earlier forays into robo, for lack of a better word, failed. They were technology solutions without a strategy. If you looked at where they were placed on websites, and what the navigational experience was like, I liken it to putting a room in a house with no windows, doors, or hallways. It's there, but no one knows how to get there. No one knows how to get out. A lot of them didn't have, and this isn't a blame. Part of it's the evolution of where the collaboration has happened with different vendors. So what I mean by that is, for a lot of people, they have to have a single sign-on, or they have to have a different ID and password to go to different parts of the bank or the credit union or the trust, because they don't have that single sign-on way of navigating to whoever the white labeled resources are. The idea of journey mapping, I'm so grateful you brought it up, is we now have to lead with education, and we have to lead with content, and there has to be kind of a community like experience within that. I think all of us go home and we get solicitations to open up a bank account, and we might get X $100 if we do direct deposit or do this amount. But how often do we transact, and do we want to move? Not very often. I think investments in wealth management do a marketing push once and it happens. I also think you have to give it a context of who the person is and what they're trying to achieve. And that's why I think goal-based planning is so important, and financial wellness is important, because you're giving them a value proposition of saying, hey, you're this age, you would like to get a house, you would like to start a family, you might want to do sabbatical, you might have aging parents or a special needs child or a trust that you need to set up. You're educating, and now you're helping them understand the what, the why, and how to navigate through the bank or the credit union. And so I think, tell me if I'm off base, but I think that's what you mean on journey mapping, is too often we have these kind of old 1990s, early 2000s drop-down menus, and you don't really understand the connective tissue between the different products, surfaces, and navigation. And I think the fact that you're asking this question is just so fabulous for all the institutions you work with, because it is that passing the baton. It is that sharing of information in a non-predatory way, but in a really helpful way that is really the secret sauce. And I think of all of these things as sort of like back in the day, you used to make mixtapes and you would have to have the right songs with the right tonality, the right transition, and keep it within a certain time frame before it went to the other side. There's an art and science in how we present and when we present additional information, videos, things of that nature. So I've always said that the investments and other things are a little bit commoditized. It's actually the value proposition of we really see you. We're a trusted place. We're going to lead with a gift, which is education and also transparency or interactive simulations that you can see what happens. And I think that becomes just such a rich experience. And I do believe that wealth management or investment accounts typically have higher NPS scores, deeper client engagement, and typically do greater deposits in business compared to other clients or members in an institution. You also have a much better chance of opening accounts with the next generation. And anything that has a wealth or a 529 or a trust account associated with it, when there are those events where it's an entrepreneur who comes into a lot of money and or there's an inheritance, you have a real fighting chance now to keep those deposits. And deposits are very vulnerable, as demonstrated by the community banking crisis. It's very easy to move those things, but the more services and value add that you give back to clients, you have a real great shot of maintaining those deposits.
Awesome. So, Margaret, I think that that's a great way to wrap this discussion. That was a really good summary, a really good overview, and an outlook. Thank you for that. For our audience, what's the best way for them to learn more about you and Marstone?
Well, thank you for that. Marstone.com is our website. There's tons of information there. You can also reach out to sales@Marstone. My email is mhartigan@Marstone. I'm happy to answer any questions or whatnot. I would ask you to put in the subject line the title of this podcast or reference Mike. Therefore, I'll know it's real and I'll make sure we follow up. And then, this podcast is available and, hopefully we get to collaborate with you, Mike, and team. And then there's lots of other materials on our website, like video and podcasts and whatnot. So we're around.
Margaret, this has been great. Thank you very much for sharing your knowledge, wisdom, outlook, and expertise with our audience. I look forward to continuing the conversation with you and learning more about Marstone and our opportunities to collaborate Midwestern Securities and Marstone in the future. To all of our listeners, we hope that you enjoyed this discussion and you found value in it. And on behalf of all of us at Banking on Growth and Midwestern Securities, until next time, thank you for joining us.
This has been another insightful journey with Banking on Growth with Michael Graham and Midwestern Securities, a member of FINRA and SIPC. We appreciate your time. If you found value in today's discussion, consider subscribing for more thought-provoking discussions in the world of finance. Your support helps us continue to bring you quality insights. If you have a topic you'd like us to consider covering or have thoughts on one of our episodes, we'd love to hear it. Just email us at media@midwesternsecurities.com. Remember, the power to grow is within you. Thank you for being a part of the Midwestern Securities community. Until next time, stay inspired and keep banking on growth.